Hi, welcome to my channel. In today's review we are going to delve into a seemingly straightforward strategy, trading using two moving averages. If you haven't done so already, I encourage you to subscribe to my channel, give this video a thumbs up and enable notifications so you won't miss my new reviews. Additionally, do consider joining my Telegram channel, which you can find via link in the description. Here you can find trade entry signals that I post daily. Also within the channel, I have provided a special registration link for Pocket Option, where you can earn 50% bonus on your deposit. Now, let's dive in. You can see on my chart that I'm using 15-second candles. I will employ two moving averages, one with a value of 60 indicated by the blue line and the other with a value of 4 marked by the green line. This will serve as my main indicators for initiating trades. This system is perceived as a rather simple one, potentially yielding results for anyone, even beginners. While this is true, it's crucial to note several subtleties, which I will discuss today. Being able to identify trends and resistance levels is paramount. At this point, I've drawn a straight line. And this line signifies a resistance level. That is a price point where the chart's trend typically reverses. You can determine this based on the previous price movements. The strategy essentially hinges on the crossover of the moving averages. When the SMA4 moves upwards and crosses the SMA 60, a call option is opened. Conversely, a put option is triggered when the SMA4 moves downwards, crossing the SMA 60. We're seeing a specific development. If the green line crosses above the blue one, it indicates a signal to open a put option. Do note, it's the SMA4 that should cross the blue line, not the price chart itself. The blue moving average corresponds to the medium-term trend, which is currently in a downward direction. The green one reflects the short-term trend. Right now, I'm waiting for a crossover. But there is a potential problem. There is a chance that when the moving averages intersect, the chart could hit a resistance level. In that situation, the trend might reverse, or the price could consolidate. In those circumstances, the expiration time for the trade I've set might not be enough for my prediction to be realized. In trading, comprehension of your actions is crucial. Decisions should be made rationally, not emotionally. At this moment, many novices might be under the impression that they should initiate a trade expecting an increase in the exchange rate, but this could be dangerous. It's essential that beginners understand and stick to this significant rule: never trade against the trend. Take note that there was a crossing of the lines here, indicating a call option. But following this, the chart moved into a sideways pattern, and it's highly probable that our position on growth would not have come into fruition within 2 minutes. You can observe that the chart occasionally fell below the level of line intersection. The trend is denoted by a blue moving average, representing the direction the price is aiming for. At this moment, it's following a descending trajectory. Meanwhile, the chart is depicting a false move that could reverse direction at any given second. In order to track potential trend reversals, I pay close attention to the stochastic indicator. As it stands, it is indicating an overbought condition. However, from the chart it can be inferred that the price will soon be going down. As we are waiting, I'll tell you about the risk management strategy. I advise initially wagering no more than 1% of your deposit. For clarity, I'll do the same now. My bet is $40. In case of successful bet, my income will be $36.80. So I recommend testing this strategy on your own. You will receive a link for the bonus deposit if you message me on Telegram. The link is shared in the video's description. Look out for the resistance level. The blue trend line, representing medium-term trend, is hitting this level. A reversal could occur. In such a case, it won't be advisable to enter the trade, implying my waiting would have been unfruitful. A sharp decline is now beginning. It's tempting to predict the next trend based on emotions, especially after a prolonged period of waiting, or based on the fact that the stochastic trend is pointing downwards. This is a trap many beginners fall into. Don't do that. For us, what's important is a combination of signals: the stochastic, the chart intersecting the resistance level, and the intersection of moving averages. Alright, The chart has reached its intended mark. Now we wait for it to stabilize below the resistance level. I'm confident about the strong momentum, so I'll increase my stake slightly to $50. I'm already anticipating a grand plunge downhill. Yeah. The key now is to not miss the opening of the trade. The moving averages have intersected. Let's zoom in for a more clear view. I am opening a put option. Okay. I've been waiting for the ideal moment. All the criteria have been met and I am confident about the result. The stochastic has now entered the oversold zone and the chart has breached the level and it has broken through at a rapid pace, which indicates that my preliminary analysis was accurate. Oh, if anyone thinks this video is too long, I apologize. I believe that what I've shown now is the most essential for understanding the market. In actual trading, you can't always close deals profitably every minute. In fact, if you try to do so, you are more likely to incur losses. What's important is the ability to identify the prerequisites for opening an option and, most importantly, to wait for a strong signal. While we're at it, I will share a useful trick. I'm not going to change the chart so you can see everything in real time. If you become proficient in navigating the pocket option interface quickly, you have the ability to switch instantly to other currency pairs that involve similar currencies. Mostly the charts would look similar and provide you with a chance to open several analogous options on different pairs. A few more words about strategy. It is ineffective to apply this strategy in a market with sideways trends. This usually happens when there is no volatility. In such scenarios, the chart looks extremely flat with no major fluctuations and the blue SMA would tend towards a straight line. We currently observe a significant downward surge. With the given conditions, we can be sure that the chart won't reach the options opening level within the remaining time. We're now seeing a substantial downward trend. We can be confident that the chart will not reach back to the opening level of the option in the remaining time. My transaction was successful. Yeah, I made a profit of $46. Great outcome. Let's move on to other currency pair. I've initiated a trade with the euro-dollar pair. By the way, this presents a very interesting case. As you can see, the primary trend indicated by the blue line is either heading towards stability or a decline. Currently, it's not very clear. In such situations, there are a different scale. Since my trades are in 15-second intervals, I'll shift my attention to the 1-minute chart instead. Here, we observe that the main trend has been on a downward trajectory for some time, so in 15-second chart I'll be entering the trade solely on a fallen trend. This decision holds despite the visual indication, which might suggest that placing a call option now is logical. This is applicable when the blue line intersects from beneath. It's also important here to take note of the local resistance level. I'll illustrate it on the chart now. Opening a trade with the expectation of an upward movement carries the risk of running into this resistance point. If this happens, the trend could potentially reverse and fall beyond my preferred range. Therefore, I wait for reversal and place a put option for decrease. Let's revisit the 1-minute chart. As you can see, the resistance level I've identified has already triggered a reversal in the chart before. It's very likely that the same scenario will play out now. And it did. That's currently taking place. Additionally, I noticed another resistance level on the chart where the price had previously consolidated. This should also be considered, and the transaction should be made only after the chart breaks through this level. Otherwise, there is a chance that the trading could start to move laterally, which is suggested by the flattering on the blue line. Let's highlight that. Fundamentally, we're facing a situation that mirrors the scenario of the last trade. I'm waiting 3 signals. The chart breaking through the node level, the green line crossing the blue line, and a switch in the trend as shown in the stochastic oscillator. To avoid errors, make use of multiply indicators. As in this situation when I'm monitoring the trend using the stochastic oscillator. Enlarge the graph to confirm the correctness of the trend. In upcoming videos, I'll discuss other trading strategies and explain complex issues in detail. To ensure you don't miss anything, subscribe to my channel and turn on notifications. Additionally, I share robust trading signals on my Telegram channel every day. You're welcome to use them at no cost to maximize your profits. The link to the channel is provided in the video description. Also, feel free to send me a direct messages. I'll send you a registration link for Pocket Option that includes a free bonus of 50% added to your deposit. The transaction will wrap up in a few seconds and I'll be ending the trading session. If you found the video useful, don't forget to give it a thumbs up. Feel free to post your questions in the comment sections. Until next time, trade smart. See you.